We look forward to discussing how Foundation for the Carolinas can help you maximize charitable gifts of closely held business interests. In this video, we will introduce you to Foundation for the Carolinas, provide a brief overview of the charitable landscape, and spend the majority of our time discussing important considerations when donating closely held business interests. We hope the case studies provided will help inspire you to think broadly about the assets you can maximize for charitable purposes. Foundation for the Carolinas is this region's community foundation, serving 13 counties in North and South Carolina. Established in 1958, we are a civic leader and a philanthropic partner. FFTC supports personal and corporate philanthropy through a range of innovative fund and giving options. We also drive nonprofit sustainability through endowment management, customized solutions, and grant making. Our mission is to inspire philanthropy and empower individuals to create a better community. With nearly $4 billion in charitable assets across more than 2,700 charitable funds, we are the 5th largest community foundation in the United States. Last year, we were also among the top 5 community foundations in both gifts into funds and grants from funds. In fact, in the past 2 years alone, FFTC has distributed nearly $1 billion to the nonprofit sector. And increasingly, we see our clients considering gifting non-traditional assets to enhance their giving potential. Furthermore, we offer a broad range of charitable vehicles so clients can customize a portfolio that drives the charitable impact they seek. While donor-advised funds are our most popular by far, we also offer designated funds, which names a specific charitable institution as the beneficiary. Typically, these funds are utilized to support those nearest and dearest organizations like alma maters or houses of worship. Agency funds, which are established by nonprofit organizations to help provide stable, predictable sources of income and future financial security to the charitable organization. Field of interest funds, which name a specific area of interest, such as education or the arts, is the recipient of grants from the fund and are typically directed by FFTC or a committee with subject matter expertise. And scholarship funds, which can provide financial support for students ranging from kindergarten to graduate school. And for individuals with funds in excess of $2 million, we offer custom services to provide additional governance and grant-making support to further formalize the client's philanthropy. Now that you have a better understanding of Foundation for the Carolinas, I will provide a brief overview of the charitable landscape. Philanthropic giving is deeply embedded in American culture. And as you can see in the chart, charitable giving has steadily increased. The majority of giving is being done by individuals and increasingly through charitable vehicles like donor-advised funds. In fact, according to a recent study released by National Philanthropic Trust, DAFs granted half of the dollar amount that private foundations granted while only having about 4.5% of private foundation assets, underscoring that the dollars contributed to donor-advised funds are being rapidly deployed for charitable good. But what is interesting to note is that cash remains the primary source of charitable giving. While 80% of donors own appreciated assets, only 21% of these donors have gifted appreciated assets like stock, real estate, or the topic of today's conversation, closely held business interests.
So what are the benefits of gifting closely held business interests prior to a sale? Well, first of all, you as the donor receive an income tax deduction based on the fair market value of the gift. In addition, when we receive your business interest and later sell it, this will reduce or eliminate any capital gains that are due on the sale of that interest. By making a gift during your lifetime of gifts of business interests, you also remove these assets from your estate, thereby reducing potential estate tax due at that time. In addition, when you make a gift of business interest, you create business continuity opportunities in terms of how business may transition to new owners over time. And Foundation for the Carolinas, making a gift of business interest also allows you to leverage a single gift to achieve broad charitable goals. So why work with Foundation for the Carolinas? First of all, we have a deep expertise and we can streamline the process and administration. In the last 10 years, we've facilitated more than $280 million in donations of closely held business interests. And we have multiple staff. Our staff includes multiple attorneys, accountants, and other professionals. We also have a wide array of charitable vehicles available. We've discussed these before. In addition, a supporting organization may be an option for more significant gifts. When you make a gift to Foundation for the Carolinas, you'll also have access to a dedicated relationship manager to support you and your grant making, as well as FFTC's thought leadership and grant making experience. Finally, you'll have flexibility to update your charitable plan over time as things change. How does the process work? This next will summarize how the process works. FFTC conducts due diligence on a proposed gift. Following approval, you as the donor would gift the closely held business interest to Foundation for the Carolinas, and specifically to our affiliate, Community Investments Foundation. Then the foundation will collaborate with you to help determine a liquidation strategy for the business interests. And finally, after liquidation, the proceeds are transferred to an FFTC fund and available for distribution to charity. So the entity which Foundation for the Carolinas utilizes to accept gifts of business interest is Community Investments Foundation, and that's a Type 1 supporting organization of Foundation for the Carolinas. Essentially, that's an entity we've created and which Foundation for the Carolinas controls the board of. It derives its public charity status from its relationship with the foundation. Community Investments Foundation is structured as a Florida charitable trust. And this unique structure maximizes the tax benefits for you as the donor. It can mitigate federal and state unrelated business income tax, which is sometimes due in connection with income from businesses owned by nonprofits. It also avoids payout requirements while we hold the business interest. This can be contrasted with a private foundation, which will typically have a 5% payout required. In addition, our structure generally allows for a longer sales and redemption period. For all assets, we have at least 5 years that can generally be extended to 10 years. And for some assets, we're able to hold even longer if that's part of your plans. Again, this period is longer as compared to private foundations. So let's go in a little more detail related to the steps involved. The first step is really due diligence and the gift. So first, you as donor would express an interest in making a gift, and we'd work with you and your advisors to conduct due diligence. Following successful completion of that due diligence and upon approval by the foundation, you gift the assets to Community Investments Foundation. This gift is a legal transfer of the asset to Community Investments Foundation. And in connection with the work, we assess a one-time gift acceptance fee equal to 60 basis points times the value of the gift. That fee is accrued until the time that the business interest is ultimately liquidated, so it does not require a cash payment at that time. You'd also be entitled to an income tax deduction based on the fair market value of the gift, and that's generally going to be up to 30% of your adjusted gross income. In connection with that deduction, you as the donor would be required to get a qualified appraisal. That's an IRS requirement necessary for you to take that deduction, and we can certainly assist you with identifying appraisers if you're not aware of one in town. Following the sale or liquidation, proceeds will generally not be subject to capital gains. There are some special rules for certain entities, primarily S corporations, which are a type of corporations, and we're happy to walk through those with you and your advisor. Moving to step 2, the holding period and liquidation. We're going to collaborate at the time of the gift to really understand the most effective strategy for liquidation based on your goals. For business interests, there's a number of options available. The first one, and probably the most common one we see, is a sale to a third party. Many times a donor will reach out to us. There's a future sale that they're expecting. Maybe somebody's made an inquiry into the company, and they say, hey, I'd like you to sell your interest as part of that sale, which we think is going to happen. But there are other options as well. The donor's partners, key employees, or family members may purchase and redeem the interest. In addition, the corporation may choose, or other business structure may choose, to redeem the interest. And again, we're happy to work with the donor and the other party involved on whatever liquidation strategy makes the most sense. Moving to step 3, and this is, of course, what everybody's here for, is that's achieving the philanthropic goals. And upon liquidation of those business interests, the proceeds are transferred to a gift fund at Foundation for the Carolinas. We discussed a number of gift fund options. What we often see is individuals making gifts with the proceeds being transferred to a new or existing donor advised fund, but the other options we discussed earlier are also available. Following the distribution to the new FFTC fund, one important thing to note is that there's no immediate distribution to other charities required. So you can take the time to make the decisions and the plans you desire in connection with charity. That could be over a period of years. It could be an endowed fund and even longer, but we'll work with you as part of the process to help figure that out. We're also available to assist in creating charitable plans, and those may involve family members, they may involve friends, they may involve just setting up a plan for your favorite charities to support them after your death. And again, we will assist in that. We want to help you maximize your impact and achieve your goals. And then for larger funds in excess of $2 million, we also offer a number of custom services to help you, assist you in your philanthropic goals. I want to briefly talk about a couple examples of individuals who've made gifts to Foundation for the Carolinas in the past. The first one is Clay Grubb. After establishing a donor advised fund, commercial real estate developer Clay Grubb, he quickly realized the benefit of managing his charitable fund and charitable giving through his fund. So he began giving appreciated stock, which is also an excellent way to gift. And by that, I mean appreciated publicly traded stock. Think of Amazon stock or Apple stock. But eventually he realized there were opportunities with closely held business interests he owned. This started by gifting LLC interests in Glen Lennox, one of the first mid-century modern planned communities in the country. And the interests in Glen Lennox are held by the foundation, and the income provides annual support to real estate programs at UNC Chapel Hill, as well as UNC Charlotte, where Clay Grubb served on the advisory boards. When the properties are actually liquidated in the future, the school will receive more sizable contributions in connection with those ownership interests. Clay also contributed ownership interests in a 20-year-old private equity investment that's since been liquidated. He allocated a portion of those proceeds to establish a new fund in honor of his parents, support nonprofits in his hometown of Lexington, North Carolina. Hopefully that shows not only how you can use closely held business interests, but some of the wide variety of charitable purposes you can accomplish using those interests. Also would like to talk about another example involving Walker Poole. Walker's been a longtime fund holder at Foundation for the Carolinas. And several years back, he approached our team about a potential charitable gift of ownership interest in a private equity fund managed by his private equity firm. And while liquidation of the underlying portfolio companies in the fund was not imminent, Walker and his colleagues wanted to talk about whether he could make a charitable gift of carried interest now. So we work closely with Walker and his advisors to help structure a gift of partnership interest. As the portfolio companies in the fund have been sold since then, the proceeds have been added to Walker and his partners' various donor advised funds. For Walker in particular, this has allowed him, as well as his wife Ann, to expand their charitable impact. They've supported a number of local organizations, including Charlotte Country Day, Crisis Assistance Ministry, and Hopeway. And again, we hope this is a really helpful example to show the broad way you can use a gift of business interest to support your charitable planning.
Thank you for your interest in this conversation about gifting closely held business interests. If you're interested in learning more, join us for our virtual office hours on Thursday, September 22nd from noon to 1 p.m. or email us to schedule a separate meeting at your convenience.